안녕하세요. Sc제일은행 수석 이코노미스트 박종원입니다. 벌써 11월인데요. 올해도 거의 끝나가고 있습니다. 고객 여러분 모두 풍성한 한 해였기를 기원합니다. 요즘 금융시장이 상당히 어려운데요. 보복 소비, 델타 변이, 중국의 부동산 사태, 또 연준의 테이퍼링, 유가 상승, 인플레이션, 스태그플레이션 등 다양한 상반된 뉴스들이 매일매일 새롭게 나오고 있습니다. 도대체 뭐가 사실인지 알기가 쉽지 않은데요. 오늘은 이런 고민들에 대한 답을 좀 드리고자 여러분도 익숙한 저희 은행 수석 이코노미스트인 에릭 로버슨을 모시고 시간을 가져보려고 합니다. 최근 저희 은행은 몇 주간 고객들로 하여금 가장 걱정되는 이슈가 뭔지 질의를 했고요. 그 서베이를 진행을 했습니다. 많은 질문 보내주신 거 감사드립니다. 100가지도 넘는 질문을 받아서 오늘 다 커버하기는 힘들 것 같고요. 많은 분들이 물어보신 좀 중복된 내용 중심으로 오늘 세션을 준비하도록 하겠습니다. 가상화폐라든지 라이브 등에 대해서도 많이 물어보셨는데요. 그거는 좀 테크니컬한 면들이 있어서 저희가 따로 이메일이나 보고서를 통해서 답변 드리도록 하겠습니다. 오늘 즐거운 시간 되시길 바라고 좀 유익한 시간이 되시기를 바랍니다. Eric, thank you for joining us on your busy schedule. First, would you like to say something to Korea clients?
Yes, of course, Chong-Hoon, thank you so much for having me. And a big welcome and a big hello and a big thank you to all of our clients in Korea, as always. We've been saying this every few months now for the last 18 months, but we hope that this is the last virtual session that we have to do. We are looking forward to hosting our global research briefings in person again, and obviously all looking forward to traveling to Seoul in the near future. So fingers crossed for 2022. But as always, a big thank you from the research team to all of our clients in Korea for your support over the years. Thank you.
Okay, thanks, Eric. Let's talk about the global economic environment, because some say it's going to be good for 2022 because of pent-up demand in a strong U.S. and Europe economy. But some say some concern also exists, like China risk and also supply chain bottleneck and China slowdown and Delta variant too. So how do you see it? How do you see 2022 will look like in economic environment perspective?
Sure. I think an important point to make is that if we look at that global growth for 2022, the headline number will be smaller than 2021. That's just a mathematical fact, right? And a lot of that has to do with base effects. 2021 growth rates around the world have been extremely strong, and a lot of that is simply by virtue of the recovery from the COVID crisis. But just because we have a lower or slower pace of growth in 2022 doesn't mean that the economy is heading for a recession. As you mentioned correctly, we have a couple of regions and countries that we expect to do very well. U.S. growth should remain relatively resilient. We're expecting a very good economic performance from Europe. And also, if we look around Asia, excluding China for the moment, we believe there's very good cyclical momentum, not only in North Asia, but in Southeast Asia as well. Part of that is a function of global trade, which remains relatively robust. And part of that is the reopening of economies in the region, again, both North Asia and South Asia. You did mention the risks of China's slower pace of economic momentum. That is a risk. We believe it can be well contained by China's policymakers, but we have seen a deceleration in growth from peak levels around 8.5% annualized to probably something closer to 5 or 5.5% for 2022. And the impact of China's slower pace of growth on the region is, I think, going to be a big question mark for 2022.
Okay, thank you. I think today the Fed kind of provided their guideline for the tapering, and but we are not sure whether they will hike their interest rate middle of next year. I mean, they open the possibility, but we are not sure whether they can do. Under this economic kind of environment, do you think that they will be ready to hike the interest rate in middle of 2022?
I think you make a fantastic point, which is that the Fed is going to give itself the option of raising rates in 2022. Now, whether they exercise that option or not is a question we'll get back to in a second. But the schedule of tapering is designed so that asset purchases by the Fed will finish in the middle of next year. And that gives them the opportunity to raise rates if the economic outlook and the inflation outlook require rate hikes. Now, the market is currently priced for 2 rate hikes at the end of 2022. So if that situation materializes, I don't think that would be a huge surprise. We have a slightly different take on the forward outlook, though, which is that while we're relatively constructive on economic growth in the US, we also believe that inflation by the middle of next year will look quite a bit different than it does today. We do expect US inflation to be relatively uncomfortable for the next couple of months, which is to say higher than the Fed would like. But by the time the Fed is thinking about rate hikes in the second half of next year, we would argue that inflation will be very much on a downward trajectory. And that may give the Fed some much needed flexibility. It will also allow them to look at the labor market and to see how close they are to achieving their objective of full employment. So we still believe that the Fed will wait until 2023 before starting rate hikes, but you make the correct observation, which is it's about having that choice in the second half of next year.
Okay. Recently, for last couple of weeks, like we saw kind of a global rate kind of a hike for last couple of weeks. So, I mean, it was kind of concerned with the hawkish kind of a U.S. policy and whether kind of is it similar to like a taper tantrum in 2013? Do you see it as a taper tantrum or kind of all these we have experienced in 2013, or we are over concerned about it?
I think it's very different. There's no disputing that we have seen incredible interest rate volatility in a number of markets, whether it's some of the G10 markets like Canada, Australia, the UK, New Zealand, and even in a number of markets in Asia. We've obviously seen very pronounced interest rate volatility in Korea. We've seen a flattening and an inversion of the yield curve. I think it would be a mistake to say that that's just because of the Fed or just because of anticipated Fed tapering. The Fed has been extremely transparent over the course of the year. The announcement about Fed tapering was not a surprise, so they haven't shocked markets. And the reality is that actually it's the inflation data in a number of other countries that prompted the interest rate volatility. We saw some fairly significant inflation in New Zealand. We saw some hawkish commentary out of the Bank of England, the Bank of Canada. And so it's less about the Fed and more about global central banks potentially changing their reaction function. Now, the other point I would make is that most of the volatility has been in the front of the yield curve as opposed to the back end, right? And I think that's very important, especially for emerging markets. If we had seen a surge in long-term interest rates in both the US and the rest of the world, I think that would have been extremely destabilizing for EM debt markets. But for now, I think we would describe it as volatility in the short end of the yield curve, but not necessarily a taper tantrum.
Okay, come back to Korea's case. We saw kind of hawkishness of the Bank of Korea. So market tend to pricing late hike kind of quite rapidly. I think we are expecting 4 hikes by end of 2022. I think Korea economy is okay, but I'm not sure whether we are that strong to bear the 4 hikes by the end of 2022. Should we see as a kind of a mistake of the central bank, or are they too hawkish about it, or is there a specific reason for Korea to be kind of late rising up so rapidly? And how do you foreign investors see Korea's a bond market as of now?
Well, I would describe the interest rate environment or the shape of the yield curve in Korea as being consistent with some of the moves that we've seen in other markets. And what I mean by that is, as you correctly point out, we have 100 basis points of rate hikes priced for the Korea curve over the next 12 months. Now, I think that's just a market overreaction. I don't think that's the Bank of Korea. I think the Bank of Korea has been extremely transparent and extremely consistent in its communication. And as you and I have discussed, we think it's unlikely that the Bank of Korea delivers 100 basis points of hikes over the next 12 months. But equally, you could make the same argument for some of the other markets, right? The Reserve Bank of New Zealand, I don't think, has any intention of hiking nearly as much as what is priced into their market. And even if you look at the United States, right, we have 2 hikes priced in for 2022. We have 100 plus hikes priced by the end of 2023. I think that would be an extremely aggressive move by the Fed to deliver the full amount of hikes that are priced in. So I think what we have today is the early signs of an opportunity in interest rate markets. At some point in the first quarter of next year, we've written and we believe that there will be an opportunity to go long fixed income in the short end of these yield curves where too many rate hikes are priced in. And I think Korea is potentially a very good example of that.
I think also the reason the rate is rising bilaterally is probably because of concern of the inflation, I think. And, how do you see the inflation kind of forecast for 2022? How is it going to be transient, or is it going to be transient for a long time, or is it going to be temporary? And should we see the inflation?
Well, I think what we have all learned this year is that even if you believe that inflation is transitory for 12 months or 24 months doesn't really count as transitory anymore. The risk is inflation becoming more entrenched. Now, what I think has been challenging in 2021, and it offers a hint to the outlook for next year, is that a lot of the inflation surprise that we have experienced in a number of economies this year, both in Asia and around the world, has been a function of supply chain challenges. And part of that is COVID, right? A number of the factories around Asia have been closed for 2, 3, 4 months due to government lockdowns. And so that just means that the export machine, if you will, has broken. If we do that, the path to better vaccination coverage will lead to reopening of a number of these factories and therefore their economies, then that should present a very good opportunity for the global supply chain to improve. And if there's supply chain improvement, then that should lead to lower inflation next year. We do acknowledge, though, that certainly over the next 2 or 3 months, we believe the inflation statistics in the United States and a few of the other regions around the world will look uncomfortably high before beginning their trajectory back to more normal levels next year.
See, I think because of the supply shock, there is some concern about the stagflation. And do you see the possibility of a stagflation in 2022, or is it over concern? The market is over concerned about it.
Well, I would never say never. We can never say it's not possible, especially in this world that we live in today. But we do believe that stagflation is overpriced in market discussions. And we can break it down relatively easily. If you look at the growth side, as I mentioned earlier, we do see a slower pace of growth next year, but still good, positive economic growth around the world. And so it's very hard to describe the economy as stagnating. I believe we will be at or above trend growth next year. 2023 may be a different story. And there may be downside risk to growth next year. But I think calling it stagflation is a mistake. That suggests the risk of economic contraction. And I just don't believe that will be the case. Similarly, on the inflation side, as we just discussed, there is certainly a risk of higher than expected inflation for the next 2 or 3 months, perhaps into the first quarter of next year. But on an annualized basis, I would argue, and we as a team have argued, that by the middle of next year, inflation statistics around the world should look much more benign. So I understand the fears, I understand the concerns that people have around stagflation, but I think it's over-dramatized.
Okay. I think the next question, I think most of our clients are eager to know is our FX view. Because, as you know, we are export-oriented economy, and most of our clients are very sensitive to the FX market. So what is our dollar view for 2022?
Sure. Look, we have tried to maintain a dollar bearish outlook over the course of 2021, and the reality is that that has been a challenging proposition. The dollar is not very strong this year, but certainly a little bit stronger than where we were in January. And FX performance has been very different depending on which currency you're talking about. Our outlook for 2022 is that the dollar should ultimately start to weaken again, but I think we need to see the peak in inflation first. And if we see the peak in inflation lead to a decline in U.S. interest rates across the yield curve, then that for me would be a very good signal that the dollar has peaked temporarily. Perhaps what we need to keep in mind is taking a longer term perspective, which is that from the highs of the dollar in early 2020, the dollar is still down quite a bit from those peaks. And I know we've consolidated this year, and for example, dollar Korea is up a little bit higher this year versus where we were in January. But we expect that to go back to a dollar depreciation trend. For example, if you look at dollar versus the Korean won, we expect 1150, 1140 by the middle of next year. So a bit of Korean won appreciation next year. I think it will be a slow pace. As we discussed earlier, there is still quite a bit of economic uncertainty. And with uncertainty, investors will be hesitant to move their capital into a variety of markets. And so that may slow down the process. But ultimately, if our economic view is correct, especially in Asia, there should be a return of investor capital, especially to markets like Korea, where, as we've discussed, there's decent economic momentum.
Yeah, talking about the Korean won for 2021, considering Korea's economic growth and interest rate kind of movement, it was a bit kind of hard to Korean won didn't do well as other EM currencies. And what is the main reason behind the Korean won kind of poor performance compared to the other emerging currencies in 2021?
Sure. Look, I think there's a couple of reasons. And look, you correctly point out that with the strong economic performance, we also observed reasonably good performance from a number of different sectors in the economy. We would have expected, and we did expect, foreign investor capital to move back into Korea, especially with the momentum on the trade side. As you have correctly pointed out a number of times, we've seen some of the best export statistics out of Korea in a number of years. And we had expected that would be supportive for the Korean won. It didn't materialize that way, and if anything, the key factor, in our opinion, has been a steady stream of foreign investor outflow from Korea's equity markets. I think if the cyclical story remains strong, that investor capital should come back. Another factor that we have been surprised by is some of the emerging pessimism around the semiconductor sector and the memory chip cycle. And we've seen some discussion in the marketplace about a more negative outlook. We do not share that outlook. We are more constructive. We think the memory chip cycle still has another year or two to go, and we're quite constructive there. But we need to see optimism around that space improve or pick up before the currency can start to outperform again.
Even though we are bullish about the Korean won, some of our clients are concerned with the possibility of a Korean won depreciation. And some of our clients are asking what caused like a Korean won depreciation further from here, and what is possibility of Korean won is breaking 1200? If we break 1200, how high can it go? That was kind of question from our client. Do you have any view on their questions?
Sure. Let me start by saying that if the US dollar continues to appreciate on a broad basis, then that would be a big risk to our view, and that would be a risk to the Korean won. So if the US dollar is up, say 5% next year, then dollar Korea will be above 1200. If the RMB in China starts to weaken materially next year, again, not our base case, not our view at all, but if that were to be the case, then that would put some downward pressure on some of the currencies in the region, including the Korean won. From a domestic point of view, in my opinion, the biggest risk to our forecast is if we're really wrong on the semiconductor sector, right? If the memory chip cycle really does start to depreciate, for foreign investors, that is a real benchmark for Korea's equity outlook and for the economic outlook. And I think that's a bit of a shame in some respects, because it in some ways it ignores the performance of some of the other really important sectors in the economy, whether it's shipbuilding, autos, etc. But I think if you were to see, more downside momentum in the memory chip space, that would keep foreign investors extremely cautious on Korean assets, and I think could lead to Korean won weakening above 1,200.
Okay. Because we are more or less like a British bank, a lot of our clients asking us about the pound and also how the UK look like after the Brexit.
Look, the economic outlook initially, as the UK emerged from COVID, actually was extremely constructive, and we actually saw very good economic momentum, and we expect that to continue into next year. I mean, our economic outlook for the UK is for growth above 5%. What has made us more cautious recently, just from a sentiment point of view, is the Bank of England, quite frankly. I mean, they've spoken very hawkishly about the interest rate trajectory in response to domestic financial and inflation conditions. We do expect them to raise rates this week, but I think our view is that that's not necessarily the right thing for them to do. I think they could afford to be a bit more patient with their interest rate policy trajectory. And I think that will create quite a bit of uncertainty for foreign investors, and that may impact pound sterling. We have, as we've been discussing, a negative outlook for the dollar for next year, but we're not necessarily looking for significant appreciation of pound sterling. We see it back at 140 by the end of next year, but relative to current levels, that's not such an ambitious forecast. Brexit has created some important challenges. Shipping and transportation from Europe to the UK has really been challenged over the last few months. Part of that is Brexit. Part of that is a lack of labor supply, which has been a real problem in the UK this year. There's also been a problem with the supply of natural gas. That is causing problems for the domestic economy as well. So I think the UK has quite a few challenges that need to be resolved over the next year.
You mentioned about the gas, so let's talk about some commodity. There is some speculation, the oil price is rising because of the concern of the inflation. They want to hatch the inflation, they buy the oil. Is it a right kind of a speculation, or how do you see the commodity price under the kind of more or less we have on the inflation pressure?
Look, I think that's a valid point to make. It's a valid observation, which is that when people are worried about inflation, they look for ways to protect themselves against that inflation, and that means buying real assets. And real assets can include real estate, and it can include commodities. Now, the funny thing about that is the more people buy commodities as an inflation hedge, the more it drives commodity prices higher, and the more it makes people worried about inflation, right? So it becomes very circular. And this is what central banks worry about, right? They worry about entrenched inflation expectations. We have observed some speculative buying in the commodity markets for inflation hedging purposes. I wouldn't describe it as pervasive yet. And I'm not sure I would agree necessarily that the buying of commodities to hedge against inflation is being done in the oil market specifically. I think people would tend to buy a basket of commodities as a better form of an inflation hedge, and that would include not only energy but also base metals, some precious metals as well. And look, we've seen very good performance across the commodity sector over the last year. And in fact, since the lows in 2020, some of these commodity markets are up anywhere from 150 to 250%. So a fairly spectacular recovery, which we would describe as consistent with the economic rebound. But I think the questions in 2022 will be, if inflation stays high for longer than expected, it will be very interesting to see how the commodity markets react to that.
Okay, so I think when we talk about the commodity, we also talk about the China economy. I think,
Sure.
How do you see the China? I mean, some of our clients kind of mentioned, the slowdown of China is more or less intentional by the Chinese government. So more or less, they want to prepare the Beijing Olympics. They want to have a clean air, so they want to zero COVID before the Olympics. So they're kind of tightening the kind of the market a little bit. That is hurting the slowdown of the economy, but it's all intention by the Chinese government, so they can boost the economy if it is needed. That is kind of one view, and the other view is, the Evergrande is probably one symptom of a Chinese kind of problem. So there could be some risk we do not know. So probably both make a little bit of sense, but which is more relevant for 2022?
I do think that the recent loss of economic momentum in China is in many ways self-inflicted, right? And what I mean by that is they have pursued a handful of policies for either regulatory purposes or, as they describe it, common prosperity purposes. And I think the side effect or the impact of those regulatory policies and those economic policies almost by definition would have to imply a bit of economic slowing, right? It's unavoidable. I do think we need to spend a little bit of time thinking about each of those policies independently, because even though it's very easy to wrap them all up into one, I think in some ways they have different objectives. The regulatory pressure in the technology space is very much designed, I think, to redirect capital away from what I would call soft technology, i.e., grocery delivery apps, taxi apps, video game providers, etc., and direct capital more towards hard technology. In other words, semiconductors, artificial intelligence, etc. And there's also an element of controlling the significant increase in wealth. There's a growing gap between the ultra wealthy in China and the average person on the street, and I think the leadership in China is very concerned about that. The second issue is with regards to real estate. For a while now, they've been putting more and more measures in place designed to reduce leverage in the real estate sector, not only amongst investors, but also amongst the real estate companies themselves. And we've seen that has had some very damaging impact on companies like Evergrande this year. Now, we don't believe that Evergrande or Fantasia or any of these other companies will prove to be a systemic event for China from a credit point of view, but it will have an economic impact. There's no way around that. It will affect growth in the real estate sector. It will affect the ability of state and local governments to sell land to real estate developers, and that takes away a form of revenue. It curtails the appreciation of real estate assets, which for savers in China is a really big deal, right? Most Chinese people, a bulk of their savings, their wealth is in real estate. And if you take that away, then you take away some of the wealth effect. And again, that will have an economic impact. In terms of decarbonization, I think that you raise a very important point, which is that China is starting to embark on a decarbonization effort. Our research team has written about that already. I think that has implications for their ability to support growth going forward, because historically, when China wanted to support growth in a cyclical fashion, they would, in simple terms, they would tell their factories to run at 120% and use that to lift growth. It has, other implications as well. But it seems fairly clear that they're not going to go down that path as frequently as they used to. So again, takes away some of the potential positive growth impulse that we're used to seeing. So I think the growth trajectory for China will be lower over the next couple of years. The question is, how much tolerance does the leadership and do policymakers have for a growth slowdown from current levels?
Okay. Even with the concern with China slowdown, I think CNY has been very stable for 2021. I think it performed much better than Korean won. And also, like, there has been some core movement between Korean won and CNY, and it's didn't move together this year. And what is a strong CNY, and what is the reason we do not see like a core movement between the CNY and Korean won?
There have been a couple of factors which have contributed to CNY outperformance, as you correctly describe it. I mean, number one, China's interest rate premium over U.S. interest rates has remained relatively wide in both nominal terms and real terms. And that interest rate differential has been supportive. The other factor is, quite frankly, that we continue to see foreign investor inflows into China's onshore fixed income markets, and those foreign investor flows continue to be supportive for CNY. And then there's frankly a more traditional economic explanation, which is that the current account in China remains in surplus. Now, part of the reason for that is because there is virtually no outbound international travel, right? So outbound tourism historically would lead to a services deficit. With no outbound travel, the services deficit has remained quite narrow, and that has contributed to a current account surplus. As long as those different conditions, the current account, foreign investor flows, interest rate differentials, all of those remain in place, then CNY should remain relatively stable. And then we expect CNY to remain around current levels in 2022. We do not believe that China's policymakers are uncomfortable with CNY strength. Export momentum remains very strong out of China. The trade surplus is near historical levels. So there's no evidence of a loss of trade competitiveness, even with CNY strength. So I think that's an important observation to share.
Okay, thank you. This has come from one of our clients because of some kind of conspiracy theory, something like because of CNY is strong, whether CNY will eventually kind of replace role of the dollar, or like a possibility of like a CNY dominance. And because China economy, as you say, rates and doing okay, how do you say it? Like, is it kind of, I think it's too early to discuss about it, but I mean, how do you assess those questions?
It's a common question that we get. I think over the last couple of years, there has been increasing concern about the dollar's role as a reserve currency. And that's for a variety of reasons, right? Whether it was the trade wars that were initiated by the Trump administration, the significant deterioration in the U.S. budget deficit, the emergence of triple deficits in the United States, so budget deficit, trade deficit, and current account all deteriorating. And so there have, I think, correctly been some questions asked about the dollar's role as a reserve currency. Now, all of that being said, I don't think there's any legitimate threat to the U.S. dollar, right? It will remain a reserve currency. It is the currency used in international finance, international trade, commodities, etc. The other thing we have to remember is that when you look at reserve manager portfolios, the dollar makes up approximately 60% of their portfolio in currency terms. CNY, roughly 3%. Now, we believe the weighting of CNY in those portfolios will grow over time. And part of that is consistent with the demand for China government bonds from reserve managers. So that weighting, or the differential between US dollar and CNY, will narrow. But I don't think it's fair to say that CNY is ultimately going to replace the dollar as a reserve currency. And I don't think, by the way, China's policymakers want that. I think they would like CNY to be viewed as a viable alternative, but not necessarily a replacement for the dollar.
Okay, thank you. If I know, you have been a lot of client engagement mean, you are on demand because of the market volatility. So you met a lot of clients. What is some key takeaway from your recent client engagement, and especially if do you have any takeaway for Korea market and any kind of specific comment for Korea market from other investors in Korea?
Sure. The first observation I would make is that even with the S&P 500 at record highs, we would describe investor risk appetite as relatively low. In other words, the volatility in short-term interest rates, the underperformance of emerging markets relative to the S&P has been significant. And I think people have been frustrated in 2021 that the economic recovery that many hoped to see has not translated into better performance of financial markets around the world. And I'll give you an example. So far in 2021, the S&P 500 is up over 20%. The MSCI Emerging Markets Equity Index is down a little bit. I mean, if we were generous, we'd say flat, but it's down a little bit. This is the worst underperformance for MSCI EM since 2013, when we had the taper tantrum. And I think that has really been a source of frustration for emerging market investors. And I think what we need to see is two changes in sentiment before that relative performance changes. The first of which is higher conviction that the economic recovery in Asia will actually materialize, right? We've talked about it a lot this year, and it has been very slow to develop because of COVID and economic lockdowns, as we've discussed. But if you do see material economic improvement in 2022, that should lead to a return of investor capital. For Korea specifically, as I mentioned, even with the improvement in global trade and even with the very good trade statistics, I think foreign investors have been, overly pessimistic, certainly for Korea's equity markets. We've seen, I think, the fixed income market or investors in the fixed income market, as we discussed earlier, rush to price in a very aggressive interest rate hiking cycle. I think that's premature. And I think as some of those expectations around interest rates start to normalize, we could see a period in 2022 where financial asset performance in Korea starts to improve and starts to catch up.
Okay, I think this is going to be my last question. One of our clients asked me, they want to see inside of your black box. I think they want to know how you assess the market and what are the factors you consider for your forecast, and what are the mechanism you predicting future market. What is the key factor you pay a lot of attention? So basically, in overall 2020, what data we should pay more attention to understand the market or predict the market better.
Sure. There's a couple of ways that I think about making a forecast or crafting an outlook, and the first of which is that I spend a lot of time thinking about where we are in the business cycle, and when I say business cycle, I mean the cyclical outlook. Because it's really the cyclical outlook and the changes in the cyclical outlook that drive investor behavior and drive hedging behavior by corporates. The structural outlook is too long-term for many people. Everybody pays attention to it, but in some ways it's very hard to act on it. So the first thing I do is I try and determine what my cyclical outlook is for different countries, different regions, for the global economy. And then I try and compare that with financial assets that have a cyclical component to them. And I try and compare what cyclical assets are saying relative to my view on the cyclical outlook. And that gives you a sense for what is expected by the marketplace. And if there's a big difference between the outlook and the implied forecast in the market, then perhaps there's an opportunity. And then you start adding other layers. You start to say, okay, well, what is the outlook for monetary policy? And you and I may believe that the Bank of Korea will hike rates 50 basis points over the next 12 months, but the market thinks it will be 100 or 150. So there's a difference there. And understanding why that difference exists may create opportunities. And I think, as you and I both agree, the market is now way too pessimistic about how much the Bank of Korea will hike over the next 12 months. We don't think they will deliver 100 basis points of hike. So that may create a really good opportunity for Korean financial markets because, number one, we think the cyclical outlook is better than expected. But number two, we think monetary policy will stay more accommodative than what the market is pricing in. And so it's that combination of the cyclical outlook versus the policy outlook and understanding what the market is pricing. And when there's a difference between those, that's where there's opportunities in markets. I mean, it goes without saying that if my view is that Korea will grow 2% and the Bank of Korea will hike 50 basis points, and that's exactly what the market is expecting, then there's probably not much of an opportunity from an investment point of view, right? If you're with the consensus and that's already priced in, then there's not much to do. So it's looking for those opportunities that I find very interesting.
Okay, thank you. This is all I have prepared. And is there any final saying to our clients, Harry?
Well, look, we've tried to describe what we believe is perhaps a better economic outlook for Asia next year. What I would say as a word of not caution, but just as a more balanced approach is I do think uncertainty will remain high next year. Uncertainty with regards to COVID, uncertainty with regards to economic lockdowns, uncertainty with regards to geopolitics. We have the midterm elections coming up in the United States next year. We have important elections in countries like France next year. I think geopolitics or geopolitical uncertainty will remain quite high. And I think, therefore, economic uncertainty, especially as central banks are starting to hike rates, will also create quite a bit of uncertainty. So that we have to balance the uncertainty with a more positive cyclical outlook. So that requires some attention.
Okay, thank you. Thank you for your time on your busy schedule. So I really appreciate your time, and hopefully we can see person-to-person soon.
Yes, look forward to it and hope to see everybody in Seoul very, very soon. So thank you for having me today. Thank you.
Thank you. 네, 감사합니다. 오늘 에릭을 모시고 약간의 큰 매크로한 뷰들을 좀 얘기를 해봤는데요. 고객분들께서 상당히 좀 구체적인 질문도 많이 물어보셨어요. 스와프에 대한 질문도 있었고, 또 라이벌 대체할 금리라든지, 또 향후에 어떤 라이브 관련 금리라든지 이런 것도 상당히 많이 물어보시는데, 그런 것들은 좀 테크니컬한 것들은 제가 고객분들에게 직접 이메일이나 아니면은 뭐 찾아뵙고 좀 더 설명을 드리는 기회를 갖도록 하겠습니다. 바쁘신 와중에도 이렇게 저희 행사에 참여해 주셔서 감사하고요. 조만간 페이스 투 페이스로 뵙도록 하겠습니다. 네, 감사합니다.